Welcome back to the channel. Today is April 24th, and today we're talking about Intel. Intel just reported earnings. The stock exploded higher by roughly 21%, and it's now trading around $80 per share. That kind of move gets everyone's attention: bulls, bears, long-term investors, and short-term traders alike. The big question now is simple. Is this the start of a real turnaround for Intel, or is this just a relief rally after years of disappointment? Before we break down the business, the turnaround plan, and the risks, let's start with price targets so we have a clear framework right away. At around $80 per share, Intel is still well below its historical highs, but it is no longer a deep value stock either. In a bear case where execution slips, competition remains intense, and the foundry strategy struggles to scale, Intel could drift back toward the $60 to $65 range. That would reflect renewed skepticism around long-term profitability and market share recovery. In a base case where Intel continues executing on cost controls, stabilizes market share, and proves its foundry business is viable, the stock could reasonably trade in the $85 to $95 range over the next 12 to 18 months. In a bull case, where Intel successfully repositions itself as both a competitive chip designer and a major US-based foundry play for AI and advanced manufacturing, the stock could push toward $110 or higher as confidence in the turnaround fully returns. Those are the guardrails. Now let's talk about why the stock moved so violently after earnings. Intel's earnings weren't just about one quarter. They were about direction. For years, Intel struggled with delayed product launches, manufacturing setbacks, and relentless competition from AMD and NVIDIA. Investors lost trust. The stock went nowhere while the rest of the semiconductor sector exploded. This earnings report signaled that Intel may finally be regaining control. Management showed progress on execution, improving margins, and clearer visibility into its roadmap. Cost discipline is starting to show up in the numbers, and guidance suggested stabilization rather than continued decline. Markets don't wait for perfection. They move when expectations change. Intel didn't suddenly become NVIDIA overnight, but it moved from "this might never work" to "this might actually work." That's why the stock reacted the way it did. Now let's break down Intel's business, because Intel is very different from AMD. Intel does two things. It designs chips, and it manufactures chips. That second part is critical. Unlike AMD, Intel owns its own fabs. For years, this was a disadvantage because Intel fell behind in manufacturing process technology. But today, that same characteristic is becoming a potential strategic advantage. Intel is positioning itself as the Western world's leading advanced chip manufacturer. This is not just a company story, it's a geopolitical one. Governments and major enterprises want secure, domestic semiconductor supply chains. Intel is one of the very few companies that can realistically provide that at scale. That leads directly into Intel Foundry Services. This may be the most important part of Intel's long-term story. Intel is investing heavily to become a contract manufacturer for third-party customers, competing with TSMC and Samsung. This is expensive, risky, and will take time. But if it works, it creates an entirely new revenue stream and fundamentally changes how Intel is valued. Foundry success would turn Intel from a struggling chip maker into critical national infrastructure. That upside is why investors are suddenly paying attention again. Now let's talk about Intel's core businesses. First, client computing. Intel still dominates the PC CPU market in terms of volume, even though AMD has gained share. This segment has been weak due to PC demand cycles, but it provides massive scale and cash flow when demand stabilizes. Second, data centers. This is where Intel has been under real pressure. AMD took server CPU share. NVIDIA captured AI acceleration. Intel was squeezed from both sides. The good news is that Intel is still deeply entrenched in enterprise and government data centers. The bad news is that it must keep innovating just to maintain relevance. Recent product updates suggest Intel is at least back in the fight, even if it's not clearly winning yet. Third, AI. To be clear, Intel is not leading AI hardware today. NVIDIA dominates. AMD is rapidly improving. Intel's AI strategy is more fragmented, spanning CPUs, accelerators, and edge computing. But Intel doesn't need to dominate AI to win. Intel's AI thesis is about breadth, integration, and manufacturing scale. If AI workloads diversify beyond a single architecture, Intel has a chance to carve out meaningful niches. Earnings confidence suggests management believes this is already starting. Now let's talk about the risks, because they still matter. Execution risk is enormous. Foundries require precision, massive capital, and years of flawless delivery. Any delay could shake confidence quickly. Competition is brutal. AMD continues taking share. NVIDIA is miles ahead in AI. TSMC remains the gold standard in manufacturing. This rally prices an improvement. If Intel stumbles, the stock will feel it. But here's the counterpoint. Intel does not need to be perfect. It just needs to be credible. After years of missed deadlines and broken promises, credibility was the missing ingredient. This earnings report improved credibility. That's why this move matters. So how should investors think about Intel at $80? Intel is not a momentum AI stock. It's a turnaround and strategic infrastructure play. If you're looking for explosive upside tied purely to AI training GPUs, Intel is not that stock. But if you believe the semiconductor industry needs regional diversification, manufacturing redundancy, and long-term capacity outside of Asia, Intel becomes very interesting. This is a company reclaiming relevance, not reinventing itself overnight. There will be volatility. There will be skepticism. But for the first time in a long time, Intel is being talked about as a solution instead of a problem. And that alone changes the narrative. Thanks for watching. If you found this breakdown helpful, consider liking the video and subscribing to the channel. It really helps support the content, and I'll see you in the next one.